Welcome back to Futures with Ben. Trade Network. Not sure if you noticed, but overnight in the U.S. dollar, it posted another all year, and this morning it's holding up above the 97 handle. For a closer look at the move up and a discussion on higher means for us as investors and traders. Market strategist at Agora Financial. Welcome to the show, Alan. Good to have you back. I want to get right into the U.S. dollar. Possible the strong U.S. dollar has been part of what's creating headwinds for U.S. stocks and stock indices.
Well, I think so because of the has slowed the stock market. If you look at the macro market, with the exception of Friday, we had some profit taking. Monday, Tuesday, Wednesday, Thursday, stocks and back above the midpoint of this overall drop. Let's put in perspective. The NASDAQ are up 10% in 2018, so tech is not dead. The S&P is up 4% in 2000. A healthy bounce, but I think this stall right here is partially because of the dollar. Like you said, I did notice overnight, and I have not been a believer in this dollar strength. At some point, I'm going to have to change my opinion, but I don't know if I'm ready just yet.
Yeah, how about the move that we're seeing on the dollar and the rise in the dollar on commodities, specifically crude oil? You mentioned a little bit crude relative to the ES, but right. Dollar crude, dollar gold, Alan.
Yeah, gold has pulled back after that breakout, and let's see what it does at the 1200 level. You know, we've got an important psychological level to watch, and we're just a bit above that right now with this dollar strength. What's interesting, what's happening in the dollar is at a time that today we've got the cash markets closed, and the futures for the holiday is, if you look at the interest rates over my shoulder. So it's interesting it's happening on today when there's less market participants. So I don't know if it's as significant or not. So, you know, you like to see everybody here and you like to see heavy volume. So let's see what it looks like by the end of the week. But to get back to your question, you know, gold 1200 is something to watch on a weekly basis. And I said last week, you know, $60 in crude oil is a psychological level to watch. It did dip below it, but we're back above it today and having a bit of a bounce. It had 10 straight down sessions, so that kind of spooks the global growth story, but I'm still a believer. I think they'll sort this all out. OPEC has been successful with what they do over the last 30 years. From what I remember, I don't see them making a whole lot of mistakes.
Well, you know, let's talk a little bit about the dollar here in terms of the relationship that it shares with the yen and the Swiss and the euro currency. Right. All posted new lows into the year, or new lows for the year in the overnight session. I'm wondering, how closely now should we be watching some of the emerging market currencies like the Turkish lira? Last time the dollar was on the highs and on the run, it sparked all kinds of concerns associated with the EM currencies.
Yeah, that's the fear that dollar strength is going to hurt those little guys. So, you know, keep an eye on also the Brazilian real. You know, let's look at the peso. Those two have firmed up a bit. So that's something to watch for this week. But like I said, it's not as significant when it's happening on a day when not everybody's trading. So let's see what it spills through in the you know, obviously the relationship. You've got the dollar at the highs, you've got the euro currency at its lows. That's pretty obvious. But you look at the yen. The yen is kind of stalled here as well. It can't really get above 80. It gets to the 79 level and just sits. So you're stuck there. And in the pound, with this, you know, this lingering, Brexit finalization, you know, doesn't really get above 130, and it's stalled there as well. So again, I'm not in the catalyst business. I don't know what's going to be in some of these currencies, and from a risk-reward standpoint, maybe take a look at, you know, what the volatility is in some of these. That's a lot of times what I look for. I look for some bullish divergence in the fact when somebody makes new lows, but you don't have new highs of volatility. That tells me that the sellers are exhausted, and you could get a short squeeze.
You know, Alan, for the most part, we're talking dollar here, the dollar on the rise, and we're talking about some of the negative implications or the ripple effect. Let's talk about some of the positives, some of the benefits of having a strong dollar.
Okay, I don't know what how long that list is going to be as far as our markets go. I'm a commodities guy, so commodities markets tend to move higher. obviously when the dollar's weaker. So that can slow things a bit. And you've seen the metals move down, and we're down at 1 month lows in silver and gold as well. So it's something that the commodities markets have to battle through. That was part of my premise, that I was looking for some of these miners, metals, and resource stocks to kind of buoy themselves, push in the overall stock market. So that hurts that premise for now, but on a weekly basis.
So, Alan, for traders who focus on stocks and stock indices, there's a lot of anticipation ahead of the trade talks scheduled for later this month. But how much of an impact can we expect these negotiations to have on the currencies?
Well, that's an interesting fact, to think about. It seems to be that these issues seem to be self-inflicted. And a lot of the concerns that we've had in the marketplace over the last year and a half, 2 years with this administration, a problem is created and then a problem is solved. So net, the markets continue along their path. So I have to be respectful of the overall path in the markets. And until this recovery that we saw in the dollar, it looked like it was going to break about that's been obviously voided. So we got to start over in the dollar. So I'm keeping an eye on that. But I think that, when it comes down to it, all of these self-created issues around the world, the global trade issues, the Korea issues, we can list them all. A lot of them are, we had a top in the VIX, and we've come back down. I think we're going to see more normalization in trade, our trade, not trade, our trade of the markets. And I think trends will be a little bit more stable here as we go into the end of the year. And like I said, I'm looking at some value in some of these areas that have been hurt hard by this dollar strength. And I think there'll be energy companies, and I think there'll be crude plays, definitely. Get back to energy. Natural gas has had a breakout, and that's something that's been traded between 2 and 4 for the past 4 years, and now we've had a big boom to the upside and is approaching $4. So that's what you have to do. Is I follow charts, and those are some of the best charts, and you just have to go with what you see. Yeah,
I saw that last week, a new 2018 high there as well. Now, we talked a little bit about the timing of the dollar rally in terms of the holiday and kind of thin trade here, but we've got a lot going on this week in terms of economic data. CPI, retail sales, Fed Chair Jerome Powell speaking, industrial production, just to name a few. But is it possible that some of what we're seeing is traders trying to get positioned ahead of some of that economic data?
Well, inflation is now an actual concern. People have been talking about rampant inflation for more than a decade. But now we're starting to see inflation start to flare up. And I think the reality is starting to hit, though, with the job market. People are going to have to be paid more. Yes, hourly wages went up, I think, a nickel, but in percentage terms, that was a big bump. But I think in the big picture, you're going to have to see people are going to have to start paying for workers. The skilled workforce out there is going to demand higher wages, and eventually that's going to filter through, and that's going to be inflationary. So we'll have to see, but let's look at where we are. That real inflation right now, real wages after you strip out inflation is there's essentially no growth. But yeah, it's starting to keep up with inflation, which is important. Looking at the markets, we've got the 10-year note still stuck in a range mainly between 118 and 119 for now we're going on 2 months. So we'll see what's happening there, and there's a 75% chance there's going to be a rate hike in December. So these are all facts that the markets focused on, and we've already factored in. So we'll just have to keep on doing what we keep on doing.
Big time, Alan. Really appreciate you joining us this morning and giving us part of your Monday morning and helping us get the week started off right here. Hey, thanks to you, Alan. Much appreciated, traders. That's Alan.